This video is based on the technical analysis of NASDAQ100, which is also known as USTech, and at this time we're on the daily chart. And what we'll do in regards to the technical analysis of NASDAQ100 is identify the market structure, market patterns, key support and resistance levels, important candlestick patterns, as well as levels at which we should be looking for those potential buying and selling opportunities. Another thing that I also want to mention before we get into the actual technical analysis is that this week we will be starting earnings season, and I believe that will be starting on Thursday. And what this means is that we will be seeing a lot of choppiness and market volatility over the next 2 months or so. So we just need to be careful in regards to the buying and selling of NASDAQ. And yeah, without wasting any further time, guys, let's get straight into the actual technical analysis. And as I said, we're on the daily chart, and in regards to the daily chart, we can see that we are indeed in an upward trending market. Another thing that I also want to speak about is that we had this W structure over here, which had a neckline at that level, and at this point over here we saw price breaking to the upside and then coming down to the neckline to give it a test. And you guys know that whenever we have these patterns such as the W structure, we want to see price breaking to the upside of that neckline and then coming back to the neckline to give it a test, and at that level is where we look for those potential buying opportunities. So we should have looked for those potential buying opportunities at this point, especially if that level aligns with any key numbers that we have in regards to the Fibonacci retracement tool. What else do we see, guys, on the daily chart? On the daily chart, we can see that as much as we actually have this W structure over here and price coming back to the neckline to give it a test, we also have an opposing structure in the form of an M at this point. And as you guys know, whenever we have these M structures, just like with W structures, we want to see price at this level pushing further down to break the neckline, hitting back to the neckline to give it a test, and at that neckline is where we look for those potential selling opportunities. So we may actually see a situation, because we have a double top, where the market pushes further down to the neckline of that M structure, and at this point breaks to the bottom side, heads back to the neckline again, and then pushes further down, right? However, as I said, guys, we have two opposing structures. Number one, we have this W structure as well as this M structure, and they both have necklines at more or less the same level. So what this means is that the market from where it is come to this level, buying or selling at that level will be very, very risky, because the market may head in either direction, right, depending on the strength of buyers versus sellers, right? So what else do we see, guys? Before we continue, I would like to say that my bias actually is for the market to move further down to at least this level from where it is, and that is because, as I said, guys, we have this huge M structure. And also, if you were to go to the weekly chart, you would see that at this level over here we have a very strong level of resistance, as we've had multiple rejections in and around that level. Even in the past, you would see that, and that is one of the reasons why I say that my bias is for the market to move further down to around this level. However, having said that, on the weekly chart you will see that we also have a huge W structure, and the market at this point is more or less at this point, and I expect the market to move further up to close or to complete that structure, right? So I would love to see price actually move that down to around this level, and at this level again is where I believe we should be looking for those potential buying opportunities, right, because of that huge W structure that we have on the weekly chart. And as I said, the market is at this level more or less, and the structure needs to end at that level in line with where it started, right? So we still need to see the market actually move further up. So what's also happening possibly at this time is that this M structure could be a trap. Why do I say so? That is because, guys, as I usually say, whenever we have these M structures, what normally happens is that a lot of traders and investors usually sell on that second leg of that M structure, and they place their stop losses just above, right? So it could be that this leg over here of that M structure is a trap, and the market may push further down to give more people an opportunity to sell and just place their stop losses just above, and then we may see a situation where the market moves further up to trigger all of those stop losses, right? Because stop losses are actually liquidity, and liquidity is actually money that needs to be triggered by the market at one point or another, as I usually say, right? Another thing that I also want to point out in regards to the daily chart is that we have this candlestick over here, and what it is a bearish candlestick which has quite a small body and a very long lower wick, and you guys know that at the bottom where that wick ends we have a lot of liquidity there. Hence I believe we're seeing this candlestick trying to push further down, right? So what I'm saying in other words is that there's a lot of money stuck here, and we may see the market actually move further down to grab that market or that liquidity, and then possibly move further up, or even move further down to around this level to grab that liquidity and then move further up, right? Because as I said guys, on the weekly chart we have that huge W structure. It started at this point, and we would love to see the market end at that level in line with where it started, right? Anyway, from here I'm just going to head down to the H4 chart and let's see what is happening on the H4 chart. Just bear with me. Let's have a look. Here we are on the H4 chart. Remember guys, on the bigger time frame, which is the daily chart, I spoke about how we have this huge M structure, and I said that a lot of traders and investors actually sold on the second leg of that structure, and they placed their stop losses just above, and that actually this move to the bottom may just well be a trap. This move over here, if I can just mark it, this move can be a trap where its objective is to get as many people as possible to actually sell, only for the market to in the future head back up to grab all of those liquidity points, right? But here we are on the H4 chart, and on the H4 chart we can see that the market is also in a downward, or has been in an upward trending market. Having said that, we can see also that we had an M here with a neckline at that point. Price actually at this point over here broke to the bottom side of that neckline, went back to the neckline to give it a test, and at this point over here is where we should have looked for those potential selling opportunities, right? Having said that, we can also see that at this point in time the market is actually at a very strong level of support, and that is because we've had multiple rejections in and around that area. And just remember that support and resistance are not lines, guys. Support and resistance are not lines, they are areas. So this whole area over here, we could say, is a very strong level of support. And as much as I said earlier that my bias for market continue to pull down to those levels that I spoke about, we may actually see a situation where the market from where it is, because we're at a very strong level of support, pushes for that up to grab all of those stop losses that I spoke about, right? But in as far as buying and selling opportunities at this stage, I don't see any. But let me just also point out that we have these candlesticks over here, and what they are bearish candlesticks with small bodies and long lower wicks. And as I said guys, these candlesticks are telling us that we have a lot of money stuck here, a lot of liquidity, and we may actually see price move further down to grab those liquidity points and then continue to move further up, right? But as I said, as far as selling opportunities or buying ones for that matter, at this point I don't see any. But just to go back to the daily chart, right, I would love to see the market from where it is actually move further down to around this level, and I believe at this level we may see the market move further up in a very strong manner, right?